Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, 3 trades. Kevin Horner will take us through the charts, and here to take us through the trades is Jason Brown, founder of thebrownreport.com and author of 5-Year Millionaire. It is great to see both of you. Jason, I see you're holding it down in our studio over there in Chicago. Jason, before we dive into your picks, I want to get your big picture take on the market. Does this make sense, this optimism we're seeing, this grind higher in the context of the latest news on the geopolitical front?
Diane, good to see you. Yeah, I think it does make sense. It seems like the market is just blowing off any potential geopolitical issues that may arise. And when you look at it, the biggest deflation we had was between us and our partners in Canada and Mexico, as well as China. And so with trade war and tariffs off the table, it doesn't seem like they're putting much weight behind what's going on with the Israel and Iran issues. And so the market is just brushing it off and apparently moving higher, slowly but surely.
All right, let's talk about your first trade on your list. I feel like before this year, there were all these questions about IBM since it's such a legacy company and could it live up to all the changes that we're seeing in the tech space. But don't call it a comeback. I mean, this stock has been on a tear this year. Tell us a little bit about your thesis here.
What I like about IBM is it seems like, I think the world, it's not as popular as the Mag 7 stock, so people kind of forget about it. They talk about IBM in the past of, it used to be the mainframe and then they didn't innovate enough, but IBM continues to reinvigorate itself and take advantage of the current technology trends. And that's no different with what they're doing with AI, with their IBM Watson AI, and as well as the purchase they made with Red Hat to deploy security and AI platforms with. They have these what they call packs, where companies can deploy specific packs from communication, from AI to integrate their cloud services on and off their platform during peak times. And so they let you basically use what you need when you need it without overpaying for extra things or using extra energy. So they're kind of like a quiet storm. And if you look at the chart, which we'll get to shortly, it's just been chopping higher and higher in a beautiful uptrend.
Okay, so that tees you up, Kevin. What are you noticing about the patterns when you look at this chart for Big Blue?
Yeah, it's hard to argue with Jason's assessment there. Just trudging higher, looks like a breakout. In fact, most recently taking out the 265 ledge, which I'm sure many traders were pleased to see. That busted a 50-point range on the stock, and that implies the potential for a 50-point move from that range to the upside if you're bullish. And you notice it's been moving higher quite nicely. New high again today, up 10% already since the breakout. So traders may be tracking, looking for weakness, might follow along a 20-day moving average. Today that comes in around 273.5 or so. But ultimately, it is really hard to look at this as anything other than bullish. I'm constantly reminded that new highs are not bearish.
Okay, so new highs are not bearish. All right, so Jason, you gave us your thesis. Tell us a little bit about your trade here.
Yeah, so you also see a little bit of a cup and handle, a W pattern coming out of that chart, which indicates to me that the stock is ready to run and go higher. I'm looking at long-term options, January 2026, so long-term about 6 months out. The 270 strike price, you're paying about $40 for that. And then your break even is about 310. If you look at IBM, if you go back, 90 days, they do have earnings coming up, but if you look back, the last earnings, they had a beat, and then you saw the stock move up from 230 to where it's at now, 288. So you're talking a 50-point move. So I believe the stock can at least move 30 to 40 points to get the break even. But if it does that with enough time premium left, that option should be in the profit.
Okay, all right, so that's your move there with regard to IBM. Let's talk about your next ticker on your list, HD, Home Depot. It's been an underperformer compared to the S&P 500. There's been some challenges here. What's your view here, Jason?
So my thoughts on Home Depot, number one, it's a technical play. When you look at the stock, it kind of bottomed out or found a base at least around 345. And when I look at the marketplace, I don't want to just be all in on tech. And so I say, what can I look to where money may be rolling into or diversifying or people may be trying to offset different things that are going on in the economy. And Home Depot, much like the Apples of the world, they have an embedded customer base. People will always need to fix up their houses. And if we can get an interest rate cut in Q3 or Q4, that could spark some buying and selling and fixing up in the housing market. Plus, just the natural time of year where people get to work on their outside and inside. I think that base that Home Depot has built, you can see the trading range. I think the stock can go back up to 390, which provides a unique risk to reward ratio for taking a low risk entry.
Okay, all right. So then, Kevin, he said, look, this is a technical play. That's what Jason said. So then what does the chart tell you about the technical patterns here?
Yeah, once again, Jason and I are in agreement. Our numbers are off slightly, but ultimately the patterns look identical. I found 347 to be supportive over the last few months here. We've pulled back to that. I have a trend line drawn in that was a broken trend line that we came back and tested just this week in the last 4 to 5 sessions here. So that looks like solid support for short-term bullish traders. And he also mentioned the proper risk versus reward here. You know, if you're looking at entry around 358, and you're looking at exit for a bad trade under 347, your risk is about 11 points. The 200-day moving average resides above us a bit at 387, so that still is about a 30-point upside for a potential 10 to 11 points of downside. Again, from a risk-reward standpoint, that makes a lot of sense. Further, though, that we do have that 20 and 50-day moving average confluence right overhead. That comes into play just around 362, 363, coincident with the volume point of control that you'll see on the chart here. So there's a definite level of short-term resistance that the trade will want to, or the stock will want to move through for many shorter-term bullish traders. But again, the risk-reward even now sets up favorably if you think that it can target that 387, 390 level and the 200-day moving average up above.
Okay, so Jason, given what Kevin just pointed out, take us back through your trade. What's the approach?
Yeah, and those are the levels I'm looking at. The 389, 390 level, that's the first level of resistance. And then if it could get back up to 430, which, you know, it could take some time to get there, but let's take baby steps first. If it gets back to about the 390, when I look at the option trade, I'm looking at the long 330 call strikes options, January 16th, 2026. You're going to pay about $45 for that. But the beautiful thing is your break even is 375. So if resistance is up around 390, we're talking about 15 points above your break even if the stock can get back to there where it's been, you know, as recent as May 16th. You're talking about some decent profit, potential profit. We always want to say potential because we never know what actually is going to happen. But from a risk reward standpoint and not being overzealous and it can go back to 440, I think it's reasonable to say at 390 we pass the break even and we can get some profit in our options with 6 months worth of time left.
Okay, so let's talk about the last one on your list. You've got Darden Restaurants on your list. I think earlier this year there was a lot of concern about the consumer and, you know, would this space hold up? And to be fair, this year Darden is outperforming the S&P 500. So what's your thesis here, Jason, for Darden?
So Darden is just in a beautiful uptrend. It's one of those diversification plays as well, just like I mentioned Home Depot. We get to move over into the food category, which people love to eat. People graduate, they get married, they celebrate a lot of different things, or they're just tired of cooking. And Darden has, I wouldn't say a monopoly, but they have some of the best restaurants. They got Texas Longhorn, they have Season 52, they have Yard House. They just recently acquired Chewy's Tex-Mex. So they have a whole suite from, I guess you would say, medium end up to high end to satisfy everybody's taste buds. And when you look at the chart, this is in a bona fide uptrend and has been technically since 2020. And I think that uptrend can continue.
Okay, so then Kevin, he says he thinks that uptrend can continue, but what do you notice about the chart?
Yeah, a lot of similarities here as well. We've seen this provide a number of basing levels. First one around 180 initially. We pushed up to 200, pulled back to support there around 196, and coincident with the 50-day moving average, which is rising pretty nicely. In fact, the longer-term trader, intermediate-term trader might watch that 210 level for shorter-term support if you're looking for a horizontal level. But ultimately, we've seen the 20-day moving average provide support since early May. So it has been trending against that shorter term moving average. And of course, it just comes down to a time frame as such. So if you're a trend trader, you're likely watching that 20-day. A close below that would be different and significant. We were below it aggressively yesterday and got buyers to step in and hold it at the close. So I think it makes a lot of sense for short-termers to maybe keep an eye on that 20-day, intermediate term, keep an eye on the 50-day and the 210 ledge. That looks like a solid support level as well.
Jason, take us through, again, a little bit more of your approach here when it comes to the trade.
Yeah, I think it's important what he just shared was you saw after earnings come out, the stock got pushed down almost to the 50-day moving average, but the buyers stepped right back in and buy the stock back up. So that shows me that the demand is there. I also wanted to mention that Darden announced that they had a $1 billion share buyback. So even if no one else is interested in the stock, they're interested in owning their own company. So when I look at the option I picked for this one, I'm looking at the October 17th. So this was a little bit shorter time frame, 2025 expiration, 200 strike price. You're only paying $29 for that option, but your break even is $229. The stock was just recently as high as, looks like $228 on my chart. So if it can get back to where it was on the 20th, which was a couple days ago, Friday, you're at break even, but you got the rest of that time to see how high the stock can run and how much your option can potentially run into the profit zone.
Okay, all right, that's one to watch then. That's Jason Brown, thebrownreport.com, and author of 5-Year Millionaire, and our very own Kevin Horner. Thank you guys. Thank you both for that. That's the big three right there.